Right, let's jump straight into this explainer on Reliance Industries' Q1 FY27 results. Today, we're putting on our institutional hats and deconstructing those massive headlines you've probably seen. If you've just glanced at the financial news, you might honestly think you're looking at a company in contraction, but the underlying data, it tells a vastly different, much more strategic story. We're going to break down this earnings illusion and move past the noise to uncover the true operational reality of India's largest conglomerate. Here's our roadmap for today. We'll start with the base effect illusion, then look at O2C Energy Tailwinds, Jio's digital scaling, Reliance Retail's steady consumption, and wrap up with some major strategic catalysts. Okay, part 1, the base effect illusion. Let's separate the headline noise from the actual operational reality. So the first thing that jumps out immediately is the top line. Reliance posted a massive 25% year-over-year surge in consolidated revenue. We're talking an absolutely staggering 311,850 crore rupees for the quarter, up from roughly 248,000 crore a year ago. I mean, by any standard, top-line growth of that magnitude for a company of this size just screams a robust operating environment. But, and this is a big but, this brings up the million-dollar question. If revenue shot up 25%, why did the reported profit after tax suddenly drop by over 22%? Seriously, how do you grow your top line by a quarter but literally lose nearly a quarter of your net profit? If you just read the headline that profit dropped to around 20,946 crore rupees, you'd probably panic and assume systemic operational failures or a total margin collapse. Actually, scratch that. You'd be completely wrong. And here are the financial mechanics behind that illusion. It's all hidden in the other income line item. Last year's Q1 base was artificially pumped up by an 8,924 crore one-off gain because they sold their investments in Asian paints. Because of that massive one-time paycheck, total other income last year looked huge, over 15,000 crore. This quarter, it just normalized back down to a standard 6,550 crore. So there wasn't an operational crisis at all, it was simply a missing one-off windfall. So if we just denoise the data, take away that one-time windfall from last year's base, the balance sheet reality completely flips. Recurring consolidated profit actually grew by 6.1%. This is steady, single-digit core growth, hitting exactly where institutional estimates expected it to be. The core business is compounding beautifully. This is what we call a textbook base effect issue. Basically, it's an optical distortion in year-over-year growth rates caused by an unusually high benchmark the year before. It totally proves that the headline profit decline is an illusion, not some crack in the foundation. As an analyst, filtering out these anomalies is absolutely crucial to understanding true enterprise value. Moving on to Section 2, O2C, or oil to chemicals, and their energy tailwinds. Let's see how they navigated global supply disruptions. The numbers from the O2C segment were just exceptional this quarter. Revenue jumped over 30% to hit roughly 201,803 crore rupees. To put that in perspective, that's about $21.3 billion. And the best part? That massive top-line growth flowed super efficiently right down to the bottom line, pushing segment EBITDA up 17.2% to 17,010 crore rupees. Now, what actually drove this? Well, they had to navigate a pretty chaotic global energy market. That 30% revenue jump was heavily driven by crude prices surging 54%. But the real profitability story is all about margins. Chairman Mukesh Ambani noted that all-time high transportation fuel cracks totally overpowered a minor production dip they had from a planned facility turnaround. Basically, they captured exceptional margins despite the downtime. All right, Section 3, Jio platforms and digital scaling. How exactly are they expanding their digital moat? Looking under the hood at Jio's core metrics, the fundamentals are rock solid. Earnings grew 15% year-over-year, driven by a solid 150 basis points of margin expansion. Average revenue per user, or APU, ticked up 3.3% to a very healthy 215.6 rupees, mainly thanks to a better subscriber mix. And check out this engagement metric. Per capita data consumption is now sitting at a crazy 43.7 gigabytes per month. But if you really want to grasp the sheer, almost unfathomable scale of their digital ecosystem, just look at this number, 1.2 billion. That was their combined digital and linear TV reach for IPL 2026. That officially makes it the most watched T20 event in history. We really can't just call Jio a telecom company anymore. It's a full-blown media and attention juggernaut. And their user acquisition velocity? It's off the charts. Jio Hotstar hit its highest ever metric with a record 530 million monthly active users. Plus, their new micro-content hub, Todga, snagged over 100 million users in just 8 weeks. Now, they did see some revenue offset in fixed broadband because of aggressive promotional schemes. But hey, that's a classic land grab strategy. Lock in the ecosystem first, pull the monetization levers later. Next up, Section 4, Reliance Retail. We're looking at steady consumption and resilience in retail. While O2C and Jio are delivering explosive scale, retail was the steady ballast this quarter. Revenue here climbs 7.4% year-over-year to 90,408 crore rupees. And this wasn't just a spike in one random category. Growth was broad-based across all key consumption baskets, which really highlights the incredible resilience of the Indian consumer when they're met with unparalleled distribution. Executive Director Isha Ambani made a really great point here, noting that this resilient performance is heavily anchored by their aggressive and continued investments into scaling digital commerce platforms. They aren't just opening up physical stores anymore. They are building a massive omni-channel retail monopoly that integrates perfectly into the Jio Digital ecosystem we just talked about. Finally, Section 5, Strategic Outlook and Catalysts. Let's talk about value unlocking in FY27 and beyond. Chairman Mukesh Ambani is signaling some massive value unlocks on the horizon that hedge funds are definitely pricing in right now. In the near term, we're looking at the phased commissioning of their huge new energy projects, transitioning the company toward green infrastructure. But the absolute crown jewel for the midterm, the highly anticipated Jio Platforms IPO. During this very quarter, Jio took a massive step by filing its draft prospectus with SEBI. That public listing is going to be a total watershed moment for Indian capital markets. So I'll leave you with this final thought to wrap up our explainer today. The headline profit drop? A total mirage. The core energy business is a cash machine, and their digital and retail ecosystems are scaling at breakneck speed. As Reliance continues this aggressive pivot from a legacy petrochemical giant into a modern, monopolistic digital and new energy ecosystem, we have to ask, are the markets truly pricing in the massive compounding value of these newly established platforms? Definitely something to chew on as a Jio IPO unfolds. Thanks for joining me on this deep dive, and I'll catch you in the next explainer.